Hi there and welcome to a new short update. Today we're going to discuss what's going to happen during this week, as Bitcoin will probably and most likely be very volatile, but most likely just continue the path that it has been starting since the FTX contagion started to take place. We're going to discuss that, but before we continue, make sure to hit the like button, subscribe to this YouTube channel, also check out our free trade letter and check out our 1 week free access, which you can find in the description beneath, to our premium platform, which gives you an insight in what we do. Now, when we're looking at the actual week right now, I think the first topic is that we're still correcting with the markets. The markets have been trending down. The markets have been trending up since 15K and since the FTX contagions took place. And we've also been seeing that due to DCG and Gemini, the markets actually started to rally up even more. So the chances that we're going to get back to 15K is relatively limited. And on the other hand, we've got a bunch of people that still are eager to short the markets. And we've got a group of people that has been selling throughout the past 8 months and that are eager to jump back into the market. So I said that corrections most likely are relatively short-lived, which is comparable to the period that we have been seeing in 2019. Now, when we're looking at a case right now, and we're looking at the markets for the upcoming week, we can see that we've got a few important events that are going to take place. First of all, we've got CPI coming in. I think that this is the core trigger of this week. The past months we have been dropping relatively fast with CPI, in which the expectations were that we have actually been dropping by 0.5 to 0.6% per month. Right now the forecast is relatively high, which means that the chances are significant that CPI will drop beneath the actual forecast, and that will just bounce back on the markets, and the markets are going to continue rallying. I think that everything beneath 6.5, unless 6.4, are going to be bullish for the markets, and you generally don't want to see this number going to be 0.6% because then inflation is picking up again. But if we can see that natural gas is dropping towards low levels, oil is still consolidating, it seems reasonable to see that we're going to get into continued negative month-to-month and year-on-year numbers even, in which we drop even faster with CPI and we continue to fall. So that's what we're looking at, and if we continue to fall, the fake relief rally can continue. Now on Wednesday we've also got core retail sales kicking in, flip towards positive, or the forecast is positive. I think that if this continues to be positive, we can have a continued positive impact on the markets as well. If this remains negative, we can see that the economy is slowing down. Same goes for the Empire State Manufacturing Index. And then we have PPI on Thursday, which has a less important impact on the markets, but still will have some impact. But I think that everything is centralized around the CPI of Tuesday, and therefore it is something you need to keep an eye on. Now, when we're looking at the markets, we have been rallying towards 24.5K, ultimately a plus 50% move on the markets. Very natural correction taking place, honestly, in which we can conclude that we are on the edge of having a bounce taking place here. So what are we looking at in terms of price action? This video has been made yesterday, so we could still be having some impact on the prices after this. So I'll just erase this, and then we can see the levels that we should be watching. So if we're looking at the levels, first of all, we've had this rejection at 23.3, which ultimately means that if we were cracking through 23.3, we would have been making new highs, but hey, bearish divergence, so this move is validated. We also have the case of the levels beneath us, which is around 20.6 to 21.2, which we are currently looking as a potential entry point, but I'll get to that in a little bit. Now we also have a new resistance point, which is at 22.6, and I think that once we're going to get into that resistance point here, I think the odds are that we're going to be, or have been, ending the correction relatively here. If we don't get towards 22.6, I think that we have one more sweep and then we can start continuing the rally. This could be due to the fear towards CPI, etc. But if we get into this area, I think that it's a huge chance for you to get into a position if you aren't already. Right now we are into a stage where the people that have not been buying in and wanted to buy in are probably getting feared of buying, and I think that those chances are relatively good at this point to get yourself into a position. Crucial resistance to break is 22.6. If we get there, we probably are going to have a slim correction taking place as people are going to take their positions off based on the fact that they assume that we continue to fall. If we get the chance of 21.2, which we most likely are having front run already, but if we get there and get another opportunity around CPI with a fake wick, I think it's an opportunity to get into an entry. So I'm believing that at this point, Bitcoin corrections are there to be bought. Recession is still around the corner. Some people have been saying recession isn't there. Recession has been there. Recession isn't avoided. But with these debt levels and with these interest rates, we are cruising towards a very big crisis. So still remain to be positive. Position yourself in risk on, I would say, but be relatively short-minded in terms of window to hold your positions. Tomorrow we're going to discuss an altcoin. Make sure to hit the like button, subscribe to this YouTube channel. Ciao.